I never thought that I would be reporting on this issue again in my lifetime, but here we are 25 years later, and I'm seeing history repeat itself. And what I'm talking about, banks are quietly denying mortgage renewal even if you never missed a payment. This is something that used to happen a quarter century ago, but I haven't seen for a long time. And here's why. Power of sale listings in the GTA are up 112% this year. And it's not because people stopped paying. It's because banks are quietly and sometimes blatantly refusing to renew mortgages, even for borrowers with spotless payment records. How can they do this? Well, when I started in the mortgage industry in the 1990s, it actually wasn't the norm for lenders to automatically renew mortgages. In fact, it was one of the secret weapons that mortgage brokers had back then through companies that were offering the same mortgages that banks did, but they weren't banks. Companies like First Line Trust, First National, and MCAP. These mortgages were guaranteed to renew as long as you made all your payments as agreed. But banks at the time weren't all offering this, and people knew it wasn't guaranteed at their bank. It was kind of scary. So people have now forgotten and taken this for granted. And I can tell you that in the 1960s and 80s, often bank regional vice presidents would do quarterly reviews of the mortgages on the book of each branch, and then they would come up with a list for the branch manager of mortgages that they wanted off the books. They'd say, get rid of these loans. Really, I kid you not. And there was no reason why this can't happen again, but you have to understand why. You have to understand that the security of the banking system in Canada is considered a protected and vital industry. The government wants it secure. So if a bank feels that your mortgage is too risky on their books for whatever reason, they can tell you that they want to be paid out and that they're not going to renew, and the government isn't going to do anything about it. They don't care. They can't make the bank renew your mortgage. You are not protected like you think you might in this regard. And so that's what we're talking about today. Lenders are pulling CRA data, they're reviewing income, they're calling files too risky in some cases, even when the client has never missed a payment. Why? Well, because mortgage arrears, people who are behind on their mortgages, it's up 59% at some banks. And renewals for 2025 and 2026 are on track to be the most difficult in Canadian history. This is not fear-mongering, this is just reality. So the question is, what would you do if it happened to you? If your mortgage was up for renewal and you're worried, if it is up for renewal and you're worried about what happens next, you should watch this video before you open your mail. Hi, I'm Peter Fabry, founder of Rewind Mortgage, a division of Brokerate, my licensed brokerage. I've been a broker for 25 years, and I've seen every kind of market, from crashes to booms to record rate hike. And in this video, I'll explain why lenders are acting the way they are and what a technical default really means and the 5 things you can do to protect yourself right now. So why are banks refusing renewals? Well, let's start with what's really going on. For about 25 years now, renewals were pretty much automatic. You paid on time, you got a new rate, and in fact, banks made it so easy for you, right? 80% of people just either ignored or signed the renewal letter, even though they knew the rate was probably higher than what they could get if they went shopping. And that's it. The norm was that you just signed the letter, and they were very focused on retaining everybody as a customer. Last thing that the banks wanted up until recently was to lose one single customer. For years, they've been focused on this more than anything else, making sure that they can deepen the financial relationship. They don't want just your mortgage business or your bank account business. They want all your, but not anymore. So which customers are we talking about here that are having trouble renewing their mortgage? Well, for starters, clients with more than 20% equity in their home that do not have a mortgage insured by an insurer like the Crown Corporation CMHC, because let's face it, in those files, the lender cannot lose. That's the whole reason you pay default insurance premium, is so that if you don't pay your mortgage, the bank is guaranteed to get their money back, 100%. So those are easy for the bank to fund, easy for them to feel good about, easy for them to sell the mortgages to somebody else if they want to. What we're talking about are files or mortgage customers where you don't have default insurance, maybe you never did, and maybe your mortgage balance is between 60 and 80% of the value of the home the last time they checked. But now with house values going down, it's possible in the lender's eyes that the value of your home could be underwater, meaning your loan and the mortgage could be more than the value of the house. This is a real possibility for banks. So people with more than 40% equity in their home, these are not typically the loans the bank is worried about because they know that no matter what, they're pretty much guaranteed they're going to get. Lenders are now re-underwriting every file, pulling your CRA income data, rechecking credit, making sure your property taxes are up to date. That's a big one. That's a technical default. If you're paying your own property tax and you're behind, you are in technical default on your mortgage. So even for small income changes, self-employed people who are writing things off, rental shortfalls can trigger a renewal reject. So some banks are calling this a technical default, and that means that even though you never missed a payment, your file can be declined because it no longer fits their new lending criteria. It's a quiet tightening, and it's pushing thousands of Canadians towards forced refinancing or worse, power of sale. So how this creates the perfect storm? Well, we're entering what I call the perfect storm of Canadian housing. Rates are the highest they've been in a while. Renewals are peaking, and banks are more risk averse than ever. So at the same time, you've got delinquencies are up, missed or late payments are up, and that's rising across every province. Now, are rates high historically? No, but they're a lot higher than they were during COVID when a lot of people got their mortgage. So that's really the benchmark to be looking at, not whether rates now are lower than they were, 20 years ago or in 1981 or whatever. What we're talking about is whether the rate on your renewal of your mortgage is considerably higher than it was when you took out the mortgage 5 years ago. That's the real risk here for lenders, is that you were able to afford the house before, but maybe you can't afford the house now with higher rates, higher payments. So the result, more forced sales, more families being pushed into panic mode. But here's the truth, and you still have control, especially if you act early. So what's the human side of this scenario? Well, behind every statistic is a story. So here's a story to give you an example. Janice from Oakville, perfect payment history, 680 credit score, stable job. Her bank declined her renewal because her self-employment income fluctuated. We found an alternative lender who approved her at a slightly higher rate, but it saved her from the prospect of having to sell her house to pay out the bank. Now, here's another human side to the story. A real example, Bill and Maria, retirees in Oshawa, their bank called them too leveraged and refused to renew their $240,000 mortgage balance. So we replaced that with a reverse mortgage, no payment, same home, complete relief, total lifestyle change, and they wish they'd done it sooner. Now, as an aside, I got to tell you, there was a time when banks were forced via legislation to stop discriminating against older borrowers, people that had good credit, nice home, and banks at one time didn't want to lend to them because of their age. They figured, well, if we're giving you a 25-year mortgage and you're over a certain age, well, there's no way that this mortgage would be paid back during your lifetime. But of course, that was ruled discrimination, rightly so. And banks were told they had to start not discriminating, but of course they can do it in different ways. They can approve you subject to some conditions that are impossible to meet. Like you have a dog with one brown eye and one blue eye, etc. You're approved, but you can never meet the condition. This is called a technical decline, where you're approved, but they can find ways to making sure that the file never funds. Anyways, I'm digressing a little bit, but the point is here that banks always have a way out if they don't want to do something. So let's take a third example here. A small investor who used private financing to cover a shortfall on 2 condos after a builder delayed occupancy. So 12 months later, he refinanced into a mainstream lender. The lesson here, there's almost always a solution, but you have to know where to look. Bankers do not not know where to look because they don't have access to any of the solutions outside what their own bank offers. And truthfully, even a lot of brokers don't know where to look because times were so good for so long. All they had to do was focus on getting a better rate for people with perfect credit and perfect income. And they really never had to learn what to do for clients in a down cycle, or where you've got a perfect customer and the bank just doesn't want to approve the loan because of market conditions. So here's the important question that we're really driving towards here is, what is a technical default anyways? What does that really mean? Let's dig deeper into this new term, technical default. It doesn't mean you missed payment. It means that your equity, it means that your income ratios, your property valuation, loan to value ratios somehow don't meet the current underwriting standards of the institution. It can also mean situations where you didn't keep up with your property tax or your home insurance or some home maintenance, something that affects the marketability of the home or gives rise to a claim such as that from a city if you're behind on your property tax. Banks can use this to quietly exit files that they see as higher risk. It's like an escape clause. It's legal, but it's devastating for you if you don't know that you have alternatives. And this is where my 25 years of experience matters, because I've seen banks make lots of different decisions in the past that were within their right to make, but have dramatic impacts on borrowers. Every cycle has a tightening and then a loosening. My job is to help you survive the in-between. And so, right now we're in a tightening phase. There's an old joke when it comes to the banks that they only ever have two directions, project do and project undo. So, this is something to keep in mind. Everything always turns around. Right now, for today, here's the shocking numbers. Let's talk data. Mortgage arrears up 59% at some banks. Power of sale listings in the GTA have jumped 112%, and most of those homeowners have never missed a payment. It's not a default, that's a rejection. Across Canada, more than 1 in 3 renewals are being declined by major banks, and this is why early planning and independent advice is critical. So here are the 5 steps to protect yourself. If your mortgage renews in 2025 or 2026, follow these 5 steps. Review your situation early. Don't wait for the bank to send you a letter. Start 6 months before your mortgage renewal. If it's in the back of your mind that it's coming up, just start small. Find out what is that date. Put a date in your calendar, make a phone call today, and contact a broker that you trust to review your situation and see what your options are. Step number 2, get your CRA file in order. If you're self-employed, get your taxes done. You don't want sudden write-offs. If you're self-employed, you don't want to find out where you can't prove whether you owe taxes or don't owe taxes, because keep in mind, you do not own your land in Canada. You own your home and you own the right to use the land via your deed, but the Crown always comes first. So if you owe money, CRA, or for any reason to the Crown, it could be a judgment, etc., that comes first and gets paid out before the mortgage lender. And this is a reason why mortgage lenders can get nervous. If you're self-employed, you haven't done your income tax, they don't know how much income tax you owe. They don't really know whether the total amount you owe with your income tax owing and your mortgage together could be worth more than the value of the house. That's the risk for them, the unknown. Get your taxes done. Step number 3, check your credit now. Resolve small issues now before they're used against you. Step number 4, explore all lenders, not just your bank. Alternative lenders can approve files based on your overall equity and payment history. Some of them are able to do amortizations, which are much longer. Instead of, say, 25 years, they can do 40 years and keep your payments low. Step number 5, depending on your age, consider reverse mortgage. They remove the payment burden entirely and keep you in control of your home. You can make payments towards the interest monthly if you wish to. You could take advantage of prepayment privileges just like on a regular mortgage and every year pay it down by a certain amount, but you don't have to. It's an optional mortgage. Taking action early turns panic planning. Lastly, here are some reasons why experience matters matters more than ever. I've watched this pattern repeat over and over again. Banks tighten, borrowers panic, experienced brokers step in to find the missing solution. That's why after 25 years, I can tell you we've seen all this before. The difference is this time I'm seeing more homeowners act early. They're not waiting for the bad news and they're preparing for it. And that's how you stay in control. So final message, if you're renewing in 2025 or 2026, don't assume your bank will say yes, even with a perfect history. Reach out early. Let's review your situation together. My name's Peter Fabry. I am the founder of Rewind Mortgage, a division of Brokerate, my licensed brokerage. I've helped Canadians for over 25 years through every rate scenario, every stress test cycle, every market cycle. Please visit rewindmortgage.ca to book a free consultation. We'll explore every option for you, from traditional mortgages, alternative mortgages, private mortgages, and yes, reverse mortgage. And we'll find the right solution for you. Because the truth is, you can't control the economy, but you can control your strategy. And experience, that's what makes the difference. I look forward to speaking with you. Please give me a call. If you found this video helpful, please hit like or subscribe, and we'll see you on the next one. Bye for now.